Well, crude oil fell the most in a week today as commodities appear to be losing their appeal as an alternative to the U.S. dollar. For more on this market, we're joined by Ed Morse, the head of commodities research at Credit Suisse. Ed was previously chief energy economist at Lehman Brothers and head of economic research at LCM Commodities. He joins us now from his firm in New York. Ed, welcome to Bloomberg News. Always good to have you.
And always good to be with you.
Ed, that trading range that we were talking about and our Laura Lee just telling us, euro falling against the dollar, that trading range about 70 to 75 right now. How long can it stay in that range?
Well, it can stay in this range for a month or so. It depends on really physical market fundamentals just as much as it does, if not more, than on macro sentiment. And we're entering a period of the year where oil demand, crude oil demand falls because the refiners in the world go into maintenance mode. Yeah. They cut back on their refinery runs by about 3 million barrels a day.
Right.
And that should keep the market soft enough.
How much of a decline might we see in crude prices as a result of this seasonal maintenance?
Well, I think we could see a decline to under 70, but I don't think it will last any much longer than it did the last time it fell under 70. The market will have the momentum to rebound, and expectations of higher crude runs will come to the fore.
Well, it seems like we have a classic supply and demand scenario going on right now. Crude stockpiles on the rise and petroleum prices are being pushed down. Is anything else out there weighing on the market?
Well, surely there's a macro sentiment, but it doesn't normally last very long. I think what we're seeing in the oil market in particular is a sort of return to normalcy. People forget that range-bound markets are what we've normally had. We have not had markets poised for breakouts. And I think the trading community is starting to remember again how to trade this kind of a market.
Ed, investors who purchased UK gas at the start of the year, they would have seen about a 15% return. But for long-only investors in U.S. gas, it was a different story. In about 20 seconds, what happened?
One was caught short fundamentally, the other one in a long supply situation, and we actually think that these bookends of the market in terms of the best and the worst performer are likely to reverse themselves next year. We think U.S. nat gas is going to be a winner, and there's going to be oversupply in Europe, which is going to bring back down to reality the prices of European gas.
All right, Ed Morse of Credit Suisse joining us today. Ed, thanks so much. Appreciate it.